Alternative investment funds, or AIFs, in Canada are governed by a complex web of regulations that vary by province and territory. While the term AIF isn't legally defined, these funds typically take the form of trusts, limited partnerships, or corporations. They must comply with securities laws, which require a prospectus for public offerings or adherence to specific exemptions for private placements. Each jurisdiction has its own securities regulator, but there's significant harmonization through the Canadian Securities Administrators. AIFs that are considered investment funds face stricter regulations, including ongoing reporting requirements. Fund managers must often be registered as investment fund managers and portfolio managers, depending on their activities. For those AIFs that only offer securities privately, while they have some reporting obligations, they aren't licensed in the same way. The most common exemption used is the accredited investor exemption, allowing for a more streamlined process. Understanding these regulations is crucial for anyone looking to navigate the AIF landscape in Canada. The term Alternative Investment Fund, or AIF, is not a specifically defined legal term within Canadian securities laws. Consequently, the regulation of an AIF in Canada will depend upon its structure, what it invests in, and how and to whom it is sold. AIFs are generally structured as trusts, limited partnerships, or corporations, and are governed by the laws applicable to their specific structures, such as trust, partnership, and corporate law. AIFs must comply with securities laws, which, in Canada, are within the jurisdiction of the 10 provinces and 3 territories. Securities laws in Canada have numerous requirements, but at the core is the requirement to deliver a prospectus or to fit within an exemption, to distribute a security to an investor without a prospectus, and the requirement to use registered persons for certain activities. In Canada, the term prospectus refers to an offering document in a mandated format that has been filed with and approved by the applicable securities regulators. This contrasts with a term sheet, offering memorandum or private placement memorandum, which is typically used to sell securities in the exempt market. Depending on the nature of the AIF, there may be restrictions on investing activities and ongoing reporting and filing obligations. Each jurisdiction has its own securities legislation and securities regulator, which has rulemaking, enforcement, and adjudicative powers. Each jurisdiction sets its own rules, but there is significant harmonization across the country. The securities regulators have formed an umbrella organization called the Canadian Securities Administrators, where they meet regularly to harmonize securities regulation, policy, and practice. National instruments are securities rules that have been adopted by all 13 jurisdictions and apply nationally. Nonetheless, there are still some differences that persist. AIFs that offer their securities to the general public must file and clear a prospectus with the applicable securities regulators, must comply with certain limitations on investment, and are subject to ongoing reporting issuer disclosure and filing requirements. For example, there are AIFs that are designated as alternative mutual funds and share a number of the same restrictions placed on more traditional retail mutual funds, with some leeway to accommodate their alternative investment strategies. AIFs that are not reporting issuers and only distribute securities to investors using exemptions from the prospectus requirement may still have certain filing and reporting requirements. AIFs that are investment funds for Canadian securities law purposes are more heavily regulated than AIFs that are not investment funds, either because they are active investors, because they conduct an operating business, or because they invest in certain alternative assets. Canadian tax laws applicable to AIFs apply at both the federal and provincial levels. Anti-money laundering laws, terrorist financing laws, and privacy laws may also apply to the fund manager and other service providers to the AIF. There are 3 separate categories of licensing that may apply to an AIF's manager. The manager of an AIF that is an investment fund must be registered as an investment fund manager in the jurisdiction in which it carries on business, in the jurisdiction where the fund resides, and in certain cases, in the jurisdiction where the fund is marketed or sold. The entity that makes investment decisions for the AIF must be registered as an advisor in the jurisdiction in which it resides and in the jurisdiction where the fund resides. Certain provinces in Canada have a separate registration regime if commodity futures, options on commodity futures, and/or certain derivatives are involved. If both the AIF and the portfolio manager reside outside of Canada, and all investment decisions are made outside of Canada, there is no requirement for the portfolio manager to register as an advisor in Canada. AIFs that are not considered investment funds do not require a registered investment fund manager, but may, in certain circumstances, require a registered portfolio manager. AIFs also typically need a dealer that is registered in each jurisdiction in Canada in which the securities of the AIF are offered for sale, although there are a few exceptions to this requirement. In addition to firm registration in respect of the above activities, certain persons within the firm must be individually registered if they advise, trade, or underwrite on behalf of a registered firm. Foreign managers and advisors situated outside of Canada may rely on certain exemptions from the requirement to register, depending on their specific activities in Canada. A common condition for exempted foreign investment fund managers, advisors, and dealers is that they only deal with permitted clients. AIFs that offer their securities to the general public are regulated by the securities regulator in each jurisdiction in Canada in which their securities are offered by way of prospectus. Although Canada has a passport system under which a single regulator can be designated as the principal regulator for the purpose of vetting and approving the prospectus. No sales of securities may be conducted until the prospectus has been cleared by the principal regulator. AIFs that only offer their securities on a private placement basis have certain reporting and filing obligations, but are not licensed or approved in the same manner. The most common prospectus exemption, typically used to distribute privately offered AIF securities, is the accredited investor exemption. Their offering document are not pre-vetted by securities regulators. However, some provinces require the manager to file a copy with the local securities regulator. Maven Trading is a Canadian investment fund. If you are interested, click the link below.